Hello again, everyone. Welcome back to the weekly analysis for the upcoming trading week, which will begin tomorrow, March 16, and run through Friday, the 21st. As usual, before we begin, let's just pray. God, we just give you thanks and praise for another day, another week, another opportunity to make moves on the charts and to make money. We thank you for your blessing, and we ask for a special blessing on anyone watching this video. Help it to be a source of inspiration and also to help them to improve in their strategy. We thank you and we love you. In Jesus' name, amen. All right, guys. So as usual, you guys will know that I have gone ahead and marked my charts for the upcoming week. Again, my blue lines represent my weekly boundaries, and my thinner green lines represents the daily boundaries. That way, it allows me to see what the market does on a daily basis, and is actually a source to help me to react to market conditions, also to decide whether to take profit or whether to hold trades overnight or throughout the week. All right, so before we begin, I will just state again for the record, I'm eternally bullish on the NASDAQ 100. It's an instrument that has been historically bullish from the time of its inception. It has broken every single high that the market has produced. So every single all-time high that the market has produced will at some point be broken again for a new all-time high. That's guaranteed, that's factual. The only time that will change, that my bias will change, is if the monthly time frame comes down and breaks to form a new low. Then I will have the beginning of a new trend. Until then, I'm eternally bullish on the NASDAQ 100. How does that play out? What does that mean? It doesn't mean that because the market is eternally bullish, that I'm going to recklessly jump into trades and just buy because I say the market is bullish. No, you understand that there are times when the market retraces, sometimes harder than others. And in those times, you wait for the bottom to be hit and a higher low is created on your largest time frame before you actually continue or you resume your buying. Until then, what I do is that I still take my higher lows and I trade them to my higher highs. In the event that a higher high is not created and I get only a lower high, then I will take my profits, and then I will wait for the market to reset and give me another higher low. Once that is made, then I take another buy and I keep repeating that process until the market eventually breaks its structure, breaks its retracement as it's currently doing, and then resumes towards making another all-time high. All right. So I hope that's clear for those of you who are new to the strategy and new to what's been going on. All right. So for this week, what am I expecting? So if I zoom out and I go to my largest time frame, currently recording a higher low, which is the monthly, you'll see that 4 weeks, the market has been selling. Okay. No panic, not to worry. The market has, again, like I said, look at your last 2 points, and your last 2 points tell the story. It's higher high, higher low, and then you have another higher high right here. So this market is clearly making higher lows to higher highs. Why am I on my weekly? I'm on my weekly for the mere fact that this is the current time frame that is now at the largest higher low. Okay. Again, like I mentioned to you in a previous video, each candle that you see here takes one entire week for it to be formed. Okay, which means there are going to be buys and sells that exist in the market. You have to understand that you are trading a bullish market, and in order for you to have a trend, of higher low to higher high, which is what makes a bullish market, the market has to retrace at some point in time. That's normal market activity, okay? So for those of you who hear me say that I'm eternally bullish and thinking that all my moves all the times are going to be only buys and the market does not allow for sells, you are absolutely wrong. That's not what I'm saying. That's never what I've been saying. I've always said to you that you need to wait for your largest higher low in order to move to your next all-time high. Okay, how does that play out? Now, let's look at last week, for example. Last week, you saw here that another higher low was created, okay, on the weekly time frame. So let's just use this tool here. This was the previous week, all right? A higher low was signaled on the previous week, okay? Let's look at the previous week. So the previous week, notice you have here, the higher low was first created this week. So it's been 3 weeks since the higher low has been created. Now people say, oh yes, they're laughing, oh, the Arbor strategy got it wrong, and this, that, yada, yada, yada. Okay, let's take this out again. What you have to understand, people, and I've been saying this all the time, okay? The fact that the market sells, it's a normal market activity so that you can create a higher low, okay? Now, let's look at the last time the weekly created a higher low, okay? The last time the weekly created a higher low, you had 1, 2, 3, 4, 5 weeks, 5.5 weeks of bearish activity, okay? So this was from the week of Monday, July 24th, all the way to August 2024, okay? So you had 1 whole month of bearish activity, okay? And at that point, people are saying, oh yes, the market is going to go down and it's going to create a new low and it's going to start making lower highs, lower lows. Guys, absolute rubbish, okay? I will say this without apology, it's rubbish, okay? What you have to understand is that each time a higher low is created on the larger time frame, your smaller time frames will in fact reflect that the market is in a bearish mode. I've always said this. Any sells on the NAS100 are temporary retracements in order to create a larger higher low. Okay, so let's look at this. All right. So we go here and we use our back testing tool. So this was the period that we were talking about right here. Okay, so it started from Monday, July 2024. Okay, all the way to Monday, August 8, 2024. Okay, all right. Let's look at this period, and I'm going to actually use a rectangle and mark it so you understand what it is that I'm saying. Because too many people just like to talk and they just talk a whole bunch of garbage and with no facts. Okay, so here we go. We're going to mark this period right here. And we're going to go here. Okay. So this was the period in question. This is 1 whole month of activity. Okay. All right. This was the higher low that was created last year. The largest higher low that was created. It took 5 weeks to create that higher low. Let's look at the monthly for the same period. The monthly for that same period, all it did was it just came down and it made a wick before it started going up again. Okay. But because this is our largest higher low, this is what I'm focusing on. And I'm only doing this so that for those of you who are still struggling to understand the concept and to get it right, that you will be able to see exactly the logic in what I'm doing. Okay. There's some people who genuinely want to understand and are trying their best to understand because they realize it makes sense. And then there are others who just talk garbage and they react to everything that the market does. And they tell you all kind of things that the market is a bear market and how we're going into a recession. Absolutely not. The market retraces. That's what it does normally. Creates the largest higher low before continuing to buy again. All right. So this is the period that we marked. So let's jump down to a time frame like the 1 hour, for example. Okay. So while that data loads, this is the entire month on the 1 hour time frame. Notice if you're looking only at your 1 hour time frame, you will fall in the trap of thinking that the market is in a recession. Okay? Because when you look at the 1 hour, for the entire month of July until August, all right, we were, bearish on the 1 hour. Okay? And that's fine. I get it. If you're looking at the 1 hour time frame, you will have that concept. But as you start to go higher, this data actually starts to make a lot more sense. Looking at the 1 hour, yes, it's bearish. Okay. You go up to a time frame like the 2 hour. Okay. You have more of the same. Lower high, lower lows, lower highs, lower lows. Okay. And it was coming from an all-time high. Okay. All right. Go to the 3 hour. Notice the data actually starts to make a lot more sense. There's a lot less noise. And you will notice that you still have lower highs to lower lows, right? But there's a lot of consolidation that's happening. Okay. You go to the 4 hour. Let's look at the 4 hour. Here we go. You have lower highs, lower lows again. All right. You look at your 5 hour. Okay. Notice you have less points. You have less lower high and higher low points. Less lower high, lower low points. All right. You look at your 6 hour. Here we go. All right. Notice the points are getting less the bigger we go. And that's why I stress to you all the times, you want to be working with your largest active time frame, which is the largest time frame that's making those higher low points that you need in order to get that buy towards the trend. So we're now at the 7 hour time frame. Now I'm one of the few traders who actually use every single time frame to do my analysis. I don't just rely on certain time frames. I look at all my time frames so I can get a clearer picture as to what's happening. Okay, so now we're back on our 7 hour. All right, you still see the same thing, lower highs, lower lows, but you notice the points are significantly less than when we started on the 1 hour. On the 8 hour, here we are. You still have lower highs, lower lows, but if you notice, you only have, boom, that one break towards the low side, then you have a lower high, then you have a lower low. Okay, let's look at the 9 hour. The 9 hour, similar situation. Okay, let's look at your 10 hour. 10 hour, similar situation. Your 11 hour, similar situation. Okay, 12 hour, similar situation. Still, so you see what I'm mentioning to you guys is that the larger time frames actually give you a more accurate picture as to what the market is doing currently. Okay. Now, remember when we started on the 1 hour, now we're at the 12 hour. If you look at the 1 hour, the story is all doom and gloom if you look at the 1 hour. Okay. Clearly, if your mindset or your scope is only focused on the 1 hour, this tells you that the market is crashing. The market is going into complete meltdown, right? This is the 1 hour time frame. Okay. We are on the 12 hour time frame. All this noise right here. You're on the 12 hour time frame. All that noise you saw on the 1 hour, that's all that's reflected on the 12 hour time frame. Okay. 13 hours. Still have that same concept, lower high, lower low. 14 hour, same thing. Okay. 15. Here we go again. 16. Here we go again. Notice the points are remaining more consistent right now. Although you have a lower high, lower low here, look at it. This lower low is higher in relation to your previous lows. So that tells you that although you have this whole month of bearish activity, it's only enough to create a higher low on your larger time frame. So we're on our 16-hour, continuing with our 17-hour. Okay, more of the same concept. 18 hours, more of the same. 19, more of the same. 20, more of the same. 21, more of the same. 22, more of the same. 23, more of the same. Notice higher highs, lows. That's a breaking structure right here. This is the confirmation of the break. First confirmation, second confirmation. Okay, if you're looking, if your largest time frame is your 23-hour, this tells you that the market is in fact looking towards a bearish transition. Okay, all right, but they're bigger time frames, so I can't stop with my 23. Now, this is all my hour time frames from my 1 to my 23-hour time frame, all confirms that the market is in fact in a bearish transition. However, I mentioned to you that the lower time frames must at some point be bearish in order to fulfill the largest higher low on a bigger time frame. So we're at our 23. Let's look at the daily time frame. Okay, now all that lower high, lower low that we saw from the 23-hour all the way down to the 1 hour, all of that activity only created a new low that was higher than the previous new low on the daily. So that's why I said to you, the higher you go in the time frames, the more accurate and the more reliable the data is that you're going to be seeing on the charts. Okay? Now we go up to our weekly time frame. Now remember, this is a new low. This tells me that the market wants to break. The market wants to break to make new lows. However, here's what I look at. I look at how my lows are formed. So this is a new low. It broke a previous higher low to form this new low. And this new low is actually still higher than the previous new low that was formed. And it is still higher than the previous new low that was formed. And still higher than the previous new low that was formed. So that tells me that the market is, in fact, still bullish. It is only in a retracement phase in order to fulfill a largest higher low. So now I'm on my daily. I move up to my weekly. This move right here was only enough to create a higher low on my weekly time frame. And that is why I've always said to you guys, there's no sense in rushing. If you wait, if you're not sure, just wait. And also practice using a demo account. Everybody and their mother, and me included when I just started, felt like you were going to be missing out if you did not use live money. Guys, it's the biggest hoax anyone can tell you. Do not use your real money when you're learning to trade. Always trade with a demo account. If you can't make money on a demo account, you will never make money consistently on a live account. Trust me. All right. So here we are. Let's go back to the daily. Now, the lowest point that was created was back in August. And the reason why I know this is because I actually took a trade from August, which I held for, the greater portion. I actually exited that trade, I think, at the last all-time high. So there's just a no-brainer right there for me. Higher lows to higher highs. I don't care what anybody says. It works. Okay, so this day here, This was actually a Monday. Made a lot. The last low that was created was done on Monday, August 5th, 2024. All right. Now, look at what happened afterwards. Market still displayed signs that it wanted to actually come down and it wanted to be continuously bearish. However, each time when it came up and it got the resistance, it came down until it eventually broke towards the upside. And that is the reason why I said to you, when I trade a bullish market, I always take my higher lows. If I take a higher low right here, and the market only comes up and gives me a lower high at this point, guess what? I take my profit and I wait for it to come down. It goes up, it gives me another high. Then I wait for it to come down. And it goes up, it gives me a lower high. I still take my profit. I wait for it to come down. It gets here now. It's lower than where I started. But because I'm not in the buy, I took my profit at a lower high. It came here. Look at what happened. Market went up. Okay, take a profit. Come back down. Market goes up. Take a profit. Look at this big drop. Dropped all the way down here. Guess what? You know what? Great place to enter because it's lower than everything around it. It's the largest at this point in time. You take that trade, okay? And you hold it because it's going to break this all-time high, guaranteed. There is no question about it. Every single all-time high that the market has created, except for the current one that is on right now, because it's retracing from that one in order to find support so it can break it again. It will be broken, guaranteed. Okay, so now we're at our largest higher low, which is the weekly. You enter your trade right here. Okay, look at what the market does. Okay, going back to the concept, like I mentioned, higher lows to higher highs, higher lows to higher highs. Every single high that the market has made in history has been broken. Okay, so we're going to go right back and I'm going to show you exactly where we are. So largest higher low. You're getting at that point. Look at what the market does. It just kept going. You had a period of consolidation and everything like that, but just watch the market. There you go. Just watch. It's a thing of beauty to see this concept working out. Notice all-time high broken again. Okay, here's your new all-time high. Market makes an all-time high, it retraces. That's what markets do. Okay, so you go here. Look, this was your all-time high, broken again. Okay, this is now your new all-time high. Guess what? It's going to be broken again. After a period of retracement, it will get broken. So here we go. Look, market did that. It pushed all the way up. Now you came down. Notice the retracement right here and it wicked out. This is a retracement. Okay, don't believe? Let's mark it. This is going to be a higher low at some point, on some time frame. Let's use my highlighter tool and let's mark it so you can actually see. So for all those guys who like to criticize and talk and everything, my suggestion to you is to take the time that you're trying to criticize somebody else's strategy and develop a strategy on your own and study the market so that you can understand what really happens. Because when you talk nonsense about markets, we're in a recession and this, that, and the other, yada, 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 no, it's not. And I'm going to show you something. I'm going to use the majority of this video to actually show you facts. This is not me making up stuff because I want to actually talk. I'm telling you stuff that I've studied, that I've seen based on historical data and current market trends and structure. So here we go. This week right here, this was a lower high, a higher low on some other time frame. So let's look. Let's try time frame like the 1 hour. Here we go. This was a lower low right here at this point that I drew, right? Go up the chain. I guarantee you that's going to be a higher low at some point in time. There we go with a low. And we're on the 14 hour. There's a higher low on the 14 hour. I mean, like I said, guys, it never fails. It never fails. Seriously. Trust me when I take it from you. There you go. Higher low right there. That point that I registered. That was only a wick on the daily. You go all the way up to the 23 hour. That's a higher low on the 23. Now remember, the 23 hours is all the 1 hour time frames from H1 all the way up to 23. That's one below the daily. Okay. And if you guys would just stop talking for a bit and just analyze, you would know, you would learn and understand that the H23, the 23-hour time frame, is a very important time frame. That only forms 2 candles for the day. It forms one that begins at 4 o'clock, okay, and ends at 5 every single day, just 1 hour for that candle. And then the next candle actually begins at 5 and actually goes all the way up to 4 the next day. But again, hey, don't listen to me. I'm just a crazy guy who talks about the higher lows, the higher highs. Why? Because I've been doing it for 4 years and because I've been studying diligently for 4 years. So I understand what I'm seeing. Okay? So don't try to correct me on something that you have never studied. Instead, what you want to do is to take the information that I'm using and try to use it with what you know or think you know and see if it actually works. And then you'll have a solid strategy. All right? So here we are on the H23. Okay? Now, this H23 time frame, look, on the daily, that was the higher low. Okay? On the weekly, that was the wick that I actually highlighted here. That was the wick. Okay? And remember I said to you, every single all-time high will and is guaranteed to be broken. So this is the current higher high, all-time high, because guess what? At no point in time in the history of NASDAQ 100, this point of 22,135.4 was broken. This was back in, this was actually December 16, 2024. Okay? Now look at what happens. And this is why I said to you, every single all-time high that NASDAQ has created is guaranteed to be broken. Mark my words. Take me to court, wherever you want to take me on it. Mark my words on this. Every single all-time high that the NASDAQ 100 has created will be broken. And that's a guarantee. So, again, this was the all-time high. Look at what the market did. So it went down, it did that. Okay? It retraced. Okay? Look at what it did. It just kept consolidating a whole, yeah, there we go. It's broken. It was broken. Like I said, every single all-time high will be broken. There will be periods of retracements, okay? But the retracements are only temporary retracements to set up the larger time frame higher lows, okay? So here we are. Look at what happens now. Market starts to retrace and everybody panics. Oh my goodness, the market is in free fall. We're going in a recession. No, we're not. It happened before. Okay, same thing happened. I just showed you. This was back last year between July and August. There are 5 weeks of retracement before the market rebounded and did that again. Now, can the market come down here? It's not impossible. If the market comes down here, guess what? And breaks and forms a new low, who cares? Why? Because you still have the monthly that still has not put on a higher low as yet. Still. Okay? So, here we are. We're on a weekly time frame. The higher low has been put on for the past 3 weeks. Okay? And at that point in time, people get so caught up that the market is bearish because they're looking at time frames like the 1 hour, the 2 hour, the 3 hour. You know, they're looking at time frames like those. At some point in time, those time frames, which are considered larger time frames, are going to become insignificant when you're dealing with bigger time frames. You're now riding with the big boy time frames. You're now riding with big boy pants. Okay, so 1 hour and 2 hour and 3 hour and 4 hour time frames, those time frames in my estimation, in my estimation or in my analysis are now smaller time frames for me. Why? Because I'm now focusing on my larger time frames, like my weekly time frame, which is currently at a higher low. All right, so let's take this off. So here we go, 4 weeks worth of retracement. We still only have a higher low on the weekly. All right. Now, how does that set me up for the week ahead? Okay. How do I trade a market that's still retracing and at the same time not going against the trend? That's very important. Now, that's a skill that takes practice and discipline in order to master. Okay. It's important that you do not get sidetracked into thinking that because the market is retracing, that is now in a recession and it's going to be a free fall. That is how people get trapped and lose their money. This is where patience is going to come on, and this is where your skill level is going to determine how you effectively trade a market that's retracing, okay, with the knowledge that the market is 100% bullish. All right. So what's going to happen for this week? What am I expecting for this week? Well, nothing has changed. I'm still trading my higher lows. So I go to my time frame like my 1 hour. Okay. This is what happened last week. There was a lot of consolidation between Tuesday and Thursday. Okay. All right. Now, am I expecting the market to continue retracing? It's possible. But at the same time, I'm not concerned about my sales. What I'm really concerned about with is my buys. That's what my focus is on. So again, if you take a trade here and it comes here and it's only a lower high, for heaven's sake, take your profit and wait for another higher low, because it is guaranteed to come. No questions about that. All right, it's guaranteed to come. All right, so here we go. We ended here on Friday. And so we look, I think my largest lower high was on my 5 hour on Friday. Okay, this was a confirmed lower high on Friday. So I'm expecting a retracement again. Okay, now let me be clear. There are some people who are selling the markets. There's nothing wrong with selling the markets as long as you understand that that is only a retracement and it won't last forever, and it's only a matter of time before the market rebounds to create another all-time high. So all those guys who are selling the markets and you're doing it effectively, kudos to you. All right? There's nothing wrong with that. One of the things that you also have to understand is that once you get in your larger time frames, once you start looking at your larger time frames, more opportunities are going to be open to you in order to buy and sell. However, if your strategy, whether bearish or bullish, was not solid from the get-go, what's going to happen is that you're going to get confused. You're going to be chasing moves. And before you know it, you're going to get trapped in a direction, either way or the other, without knowing where you are in the trade. And before you know it, you lose your account. All right. So again, last week, going back to the 1 hour, okay, the market dropped last week a total, I think it was over 11,000 pips or whatever, starting from that point right there all the way to that line. It was actually 15,000 pips last week. Okay, 15,000 pips last week if you're a seller. Okay, and if you got all of those pips, congrats to you. Okay, all right, I did something different. Okay, and what I did differently was because I am trading towards the trend, and the trend is higher lows to higher highs. And my weekly is at a higher low, I'm still trading my higher lows to my higher highs. In the event that you have significant consolidation on your smaller time frames, guess what? Get out the trade, take your profit, wait for your next higher low. So last week produced 1, 2, 3, 4 trades for me. You have 5 trading days. I got 4 trades. Okay. If you are a seller, all right, last week, so you had 1 point, 1 point, 1 point, and the sell would not have capitalized here. So you basically would have had 3 moves last week, as opposed to my 4 moves, despite the fact that the market was retracing. How do I come up with all those moves? Well, okay, if you went in from here on Friday, which I did, if you look at my last video, I'll tell you. So market came up here, okay? Didn't take the profit here, held it over the weekend. Market open, you got a significant drop right here, okay? This drop right here was a higher low, I think, on the half-hour time frame, and we can check it. So that's in Monday. Yep, that was a higher low right here, okay, on the half-hour time frame. Okay, going back to the 1 hour. Okay, so it came down, it only made a higher low. So I'm like, okay, good. Market's going to continue going up to create that higher high. Well, unfortunately, it didn't do that. It came right here, and I had about maybe 4 or 5 hours to make a decision whether or not I'm going to take my profit or not, because although it consolidated at this point, I came in here. So which means I'm still in profit. So you take your profit and you get out and you wait. So this was the first move. Came out here, waited for market to come back down, came in, entered here. Okay, market retraced, but look at what it did. It came up, it went here. I'm in profit. Okay, came out. You wait again. You get another higher low. You trade to another high. This is a consolidated high point. Okay, consolidated high point, which means it's an indirect high, which means it's not a high that formed directly from coming from a low. So that tells you that the market is still making lower highs. Okay, so you get out here and then you wait for your next higher low, which actually came in the next session. Now, let's say you came in here, market came up, okay, it retraced, went below your entry, found support again, it came up here, you're in profit again. And that's why I said your higher lows are always your safest trades and the ones that are guaranteed to give you profit, as long as you're patient and you wait on them. Okay, market came down here, here's another entry, higher low, came up here, it's at a higher high, but this is also a lower high on a larger time frame. Okay, like I said, you always have to watch your time frames. Marking that with the highlight tool, let's look at what that played out to. Here you have a lower high right there, you have a lower high right there on your 5 hour. Okay, that's enough to tell you get out of the freaking markets and wait. Okay, go back to your 1 hour. So now you're waiting. All right, let's take this off. Market came back down here on Thursday. Here's another entry. Nice trade all the way up here on Friday. Guess what? Get out of the trade and wait. It did the same thing it did last week. Same thing it did last week. It's a lower high. Okay, now you're going to wait, because guess what? The market is going to retrace. You've got to wait on those points in order to take those higher lows. You cannot enter a trade from a high point if you are buying. You cannot enter a trade from a low point if you're selling. So if the trade is here, you can't be expecting to enter from here and expecting that it's going to buy all the way from here. You got to wait for a retracement to come back down here before you buy. Here's another thing that you want to also look at. Look at your support and resistance areas, guys. You have to pay attention to where price goes and what it does each time it goes there. Okay, look to your left. The last time the price was here, guess what? It was strong support. So it bought to here. So if it did that, if it's coming from here and it bought to here, okay, why wouldn't I wait for price to try and come back down in this area before I buy again? I already know that when it comes here, it's going to buy. Okay, and I already know each time it comes here, which is over here, it sells. Okay, so again, just keep looking to your left. Look at what price does all the time, and you will be okay. All right. So it's just a matter of taking your higher lows. In the event that you get a lower high, you take your profit, you wait for your next higher low. You do the same thing. It comes here, take your profit, you wait. Okay, it comes here, go back up with your profit. Comes here, you wait. Just keep doing that. Your higher lows are guaranteed to come, and your higher highs will be guaranteed to come after your highs have been broken. And every single one of your highs is going to be taken off. All right. So again, this is what I'm expecting for this week. Price ended here on Friday. Okay. I'm in a trade. So of course, I'm in a trade. So which means you're expected, the same thing happened last week. You're expected, for a retracement before you actually get out. So if the market drops and everything like that, fine. Okay. However, like I said, you have to understand when you're going to be taking sells and when you're going to be taking buys. Okay, I'm eternally bullish. It doesn't mean that sells do not exist, but there's no rush to taking sells. There will be many sells for you to be taken. Okay, at this point, I will tell you that your next trade needs to be from a low point in order to continue going up. All right. So I hope that this video, it's a little bit lengthy today because I really wanted to take some time so you guys can understand why I say the market is internally bullish and why I'm still bullish, even although the market is retracing. Okay, so for those of you who send DMs and talk all your nonsense and everything, like the strategies doesn't work and stuff, again, like I said, you know what? You do yourself some justice to stop talking, spend that time learning what the market does so you can understand what happens on a daily basis. You don't get scared when you see moves like this because this is on your 1 hour. Okay? You remain confident when you see moves like this on your larger time frames because that tells you that the market is in fact bullish, and it's only a matter of time before this shoots and breaks this all-time. All right, so I want to wish you guys all the best for this week. And if you will notice, I don't comment as much. Why? I will say it out there. Trading View blocked me from mine because, of course, some people got up in their feelings because I thought, I call their post garbage. And I will forever continue to say that if you talk nonsense about the market being retracing, being in a recession and everything like that, it's absolute garbage. And I make no apologies for that. All right, so don't try and come and correct me on my strategy. And I tell you that what you're saying is garbage. Okay, because I'm telling you that every sell that you see on the market, on the NASDAQ 100, it's only a temporary sell in order to fulfill a larger time frame, in this case, the weekly. It's only to fulfill the larger higher lows. Can the higher low continue to go down? Absolutely. However, it doesn't change the fact that you still take your trades from your higher lows and you exit whenever you get conciliatory lower highs or lower high points on your small to medium range hourly time frames. Okay, so again, look at where your activity is forming. And let me give you a tip of the week. Okay, your largest higher low last week going into this week is your weekly. Okay, get that straight. So really and truly, higher lows to higher highs. However, here's the caveat. You also need to look at your largest time frame that is doing consolidation moves. So your largest time frame at a consolidation point on Friday was your 5-hour time frame. Okay, so your 5-hour is actually at a lower high time frame. So, sorry, your lower high point. And of course, your weekly is at a higher low. So here is the logic behind all of this. Okay, here's how the trades will make sense to you. So if you look at your 5-hour, and I got in at a higher low point right here, and the market ended at a lower high point on Friday. That tells me that the market is still retracing. The market is still making higher lows and lower highs. Higher lows and lower highs are consolidation points. For you to have a trend, you need to have higher low to higher high. You currently have lower high to lower low, but that's not on your largest time frame. So that tells you that the market is still consolidating. So if you come in on your higher low and you get only a lower high, take your profit, wait for your next higher low. All right. Now, the last thing that I want to talk about is I mentioned this in a separate video last week, relation to the DXY. Like I mentioned, the DXY and the NASDAQ usually have an inverse, relationship. So if you look at the DXY, you will see here that the market is in fact making lower highs, lower lows on your smaller time frames. If you look at your larger time frame, like your monthly and everything like that, you'll notice more of a consolidatory move. And I did, if you missed it, you can go back and check out my video that I posted on the relationship between the DXY and the NASDAQ. What am I expecting? Okay. The very suspicious thing is that the NASDAQ and the DXY have been trading in the same range, so to speak, for the past number of weeks. Okay. However, whenever you are in doubt on the markets, always go in the direction of the trend. Because once that consolidation breaks, the only thing that is going to be guaranteed is the trend. Okay? So I just wanted to put that out there for you. So that's basically all I have for this week. Still consolidating. Still trading my higher lows to my higher highs. Yes, you have this big candle here on the month with 15 days to go and everything like that. Okay, fine. You know what? It's not to panic. Again, like I say, take your higher lows. If the market makes lower highs, take your profit and wait. All right. So guys, thank you very much for watching. And God, we just thank you again for your blessings. We just ask that you just be with us as we trade, as we go through this upcoming week. Help us to be successful. Help those who are still struggling to be able to just be consistent and to be patient and to just take their time and just understand the different concepts, not to rush. We thank you for your love and for your goodness. In Jesus' name, amen. All right, guys, take care. I will see you again next time. Bye-bye.